elevation. Big blunts, dope boys wanna smoke with me. Now we ride double M's through the whole city. Niggas talking down, but they hoes feel me. A 9-figure nigga, all I wanna talk is business. I seen a big mouth get a closed casket. Self-made, took over the whole racket. A kilo after kilo, see who moved the most. 200-foot yacht, she wanna see the coast.
What's going on, guys? Welcome back to the channel. Tuning in for a Patreon promotional. Patreon promotional is a stock analysis that goes on my Patreon first and then follows on to YouTube later. So I'm probably going to put this video up on my Patreon and it'll probably fall on YouTube later. So enjoy that. All right. So a lot of requests coming in for this company, Big Bear AI. There's, it's been more than one person. I got one person on my Patreon asking about it, but I've had quite a few people outside of my Patreon asking about this company as well. So I decided to do a video on it. Here it is, okay? Big Bear AI, ticker BBAI. It trades on the New York Stock Exchange for $5.68 a share. Market cap is $2.48 billion. This company is headquartered in Virginia, in McLean, Virginia. And this is an AI company for all extensive purposes. So they say they are. And something that I've noticed about the timing of their IPO and all this good stuff is there was a lot of, a little bit about after a year after Palantir made its debut. There were some others to follow, but the AI theme has been big. So there's been a slew of companies that will put .ai on their actual ticker holding or their title of their company, if you will, trying to capture excitement and attention from the market. So that's been kind of a trend going on. A lot of those companies are probably not going to make it. All right. It's just one of the things about capital markets. A lot of these companies will uprise if there's a need for that or a demand for that actual function of a company. And Big Bear AI, I think that's one of those companies. So you guys know me. I'm always going to keep it real on my analysis. If it's a good investment, I'll say I think it's a good investment. If I think it's a bad investment, I think it's a bad investment. No, of course, it's not investment advice or financial advice. Everybody's got their own, situation in life. But disclosure with transparency. I do not own a company, or I don't own stock in this company. I don't hold a position. I'm neither short nor long. It's just a company that's been brought up to my attention. I did the quant analysis and I listened to the earnings call, looked at the company, and let's get into it. All right. Sniff check. Balance sheet. Balance sheet looks good. In fact, I actually think it looks great. All right. Their net cash here, they have $390.85 million in cash, $112.64 million in debt. That market cap is $2.48 billion, but their enterprise value is $2.2 billion. All right. Sales. Let's look at sales. Stagnant sales growth. All right. In fact, slight sales growth from 2021 to trailing up to end of 2025. So this company is having some growth issues. All right, let's just keep it real. They did 155 million in sales in December of 2022, and trailing they did 152 million. All right, so that's not good. All right, let's look at shares outstanding. Shares is gone up dramatically. So we're getting no sales growth, but we're getting a lot of dilution in shares. All right. Let's go to cash flow statement. I'm curious to see what their stock-based comp is. All right. So let me see here. Bear with me. There it is. Stock-based comp is going up. All right. And it's from 2022, or albeit 2021, we saw a great decrease, but from 2022 up to this point, they've doubled their stock-based comp. So there's a little up and down stuff going on with the stock-based comp, and they have some asset write down and restructure right here. I listened to the earnings call. It's probably related to their impairment charge, which an impairment charge is pretty much when a company makes an acquisition, all right, and they use debt to fund that acquisition. And what will end up happening is that actual asset that they purchased, that company that they purchased, will be rated, all right, from the debt markets. The debt markets will, they will keep an eye on what was purchased. If the value of that actual company does not produce fruit of profits or sales growth or valuation metric growth, the debt market will force an impairment charge to the management team and the company's stock. Okay, and these impairment charges are actually not cash transactional. The impairment charge is a accounting mechanism to document the write down of that asset that was purchased in the past. So there we are. All right. We also recorded a goodwill impairment charge of about 71 million this quarter. We go down to their cash flow statement. That's where this asset write down restructuring cost is. And you see these other charges right here. These other asset write downs are probably other impairment charges. All right. So it's a sign that they're not making good M&A investments. All right. These impairment charges are charged against goodwill. So once the company makes the purchase, the actual asset of the company will be documented, or a portion thereof will be documented in goodwill. All right, and the impairment charge offsets the balance. All right, now that we got that out of the way, investment thesis, business model. Okay, I don't have a slide deck here. And the reason why I don't have a slide deck here is they have not provided a slide deck. Okay. That turns me off. All right. I've looked at their management. They do not have an investor relations officer. That's not good. It is what it is, guys. All right. I'm not impressed with it. Based on the conference call and everything going on, I assess that this is one of those companies where they've had heavy turnover in management leadership. This is more of the idea of, okay, you guys had your chance. Y'all are fired. Let me get the next batch of management to come in and try to fix this company. And then they get a chance. Okay, you had your chance, fired. Who's the next one? And then that's kind of what's going on. What I kind of assess is going on with this company. This, even the chief financial officer is in an interim role. And what an interim role means is this is not the permanent chief financial officer. This is someone that's a temporary chief financial officer till they find the new permanent one. So not good signs, huge red flags across the board with this company. Net income, we'll look at net income losses. They're exacerbating. Okay, they posted, in 2021 they lost 123.6 million, and now they've posted a loss of 443. Not good stuff, guys. All right, cash flow and margins. Let's look at margins. Very low gross margin, negative EBITDA, net income margin. This net income margin makes me want to throw up. Negative 290%. These are not good financials. I think that this is kind of a broken company, guys. And what do I assess the business is? Okay, so they provide some software AI infrastructure for government entities, mainly the border patrol, the army, and so forth. I think that's bad right now because there's a government shutdown, so government spending is like halted when it comes to contracts. Two, There's a lot of political stuff happening with this border patrol stuff. So this may be the hot topic of this year and next year or today, but that can dramatically change at the drop of a dime with the next president, if you will. So the next political party that comes into office after this administration, they can easily shift focus off border patrol and, quite frankly, probably cut the budget of the border patrol. Okay, it's very possible. So with combination of the shutdown right now happening, they have earnings coming up Monday. All right, Monday post market, and they're trading right now at a 10 to 8. They're trading at an 18 times forward sales and a 10 times trailing sales, with no revenue growth in sight. They're expected to post negative 15% this year, and then they're supposed to grow supposedly 13%. I have doubts that that might even happen. Um, so stock price action, I mean, it's gone up. There's been some short activity, and there's some stock squeeze stuff happening with momentum and so forth in the market with this company. So there is no sales to back the fundamentals. They don't have even the gross margin to back this. I assess their total addressable market is a niche portion of government spending, and with a low gross margin, that's a huge red flag with me. All right, poor, ugly financials. I mean, the financials are in rough shape. There's no continuity with the management team. They don't have. I mean, I don't like the performance as far as investor relations is concerned. Listening to the earnings call was a little painful. I get the idea that the management and the board are running in the wrong direction when they should be walking in the right one. Their actual proposition or investment proposition is they're going to continue to raise capital via dilution to keep their company afloat, and they're also going to aggressively pursue merger and acquisitions. And I guess they're already getting hit with impairment charges from the prior merger and acquisitions that they've conducted in the past. So in America with capitalism, you can buy your way out of a lot of things. Okay. But when it comes to productivity offering to the actual public and the actual wealth creation itself, it's very hard to buy that. Okay. A lot of M&A strategy companies, a lot of them fail. They don't deliver shareholder results unless you're Google. Google is probably the one of the only exceptions that I'll make in the market, to where they turn the lemons into lemonade, if you will. All right. So if you're getting value out of this video, thumbs up and subscribe. All right. Check out my Patreon. All right. Access the hidden gem collection. Unlock all this content. I teach you how the inside workings of a watch works when it comes to investments. Get an investor community. Get more direct access to me. Learn how to multi-bag, etc. $10 a month really can't beat it. I got a free trial on there all throughout for November, and at the end of November, I'll cut that free trial off because I'm getting a lot of traction. A lot of people are coming in, and not really a lot of churn rate. Nobody is, very little amount has canceled the membership. So my members are very happy with the value that I create in there. All right. All right, going back to Big Bear, we'll summarize it up. Looking at insider activity, just sells across the board, slews of direct sales all throughout, from various officers and directors. Company looks like a mess to me. I wouldn't touch it. I think that they get hit tomorrow on earnings. I wouldn't be surprised. Post market, they're up, but once they report earnings, I think the cat will be out of the bag. I think I see this equity getting hit and knocked back down to $3 very shortly, mid $3. I'm sorry, right here on this little support back in May, and that's pretty much my take. I don't think that this is a good company. I don't think that this is a good stock to be in. All right. Um, so with that being said, I hope you guys got value. Check out the Patreon. Thank you all for your support and have a good day.